All right, it is Sunday, the weekend of January 28th, and welcome to the Trader Hub Weekly Market Review. We've updated our charts to be more clear and concise going forward as well. Let's go ahead and look at the price action for the indexes this week, starting with the NQ price. What's going on with the recent price action?
Well, this week it basically went sideways. We did see a new all-time high, but we're back down below at about at that support there that brought us up. We basically expect to see it either come back up and regain 17,600, or we expect it to go down lower. We could have it come down below the low here at 17,400 and then come back up into the range and regain it for higher highs. But for now, we expect probably lower. And you can see that on the daily here. It does look like it's a good spot for a little bit lower. Any thoughts?
Yeah, I mean, I think that it does look like, especially on the daily, that it's kind of getting ready to lose some levels here. I think we could see a retest up here at this level to gain. Like you mentioned, 17,600-ish. We have that marked out at 17,638 exactly. If we can't gain back above that, then I think we are going to see lower, and a failure to break back above that on the daily would mean quite a bit lower. Potentially another 500, 600 points lower than that. So that's a big drop. Risk is kind of to the downside now. It's going to be a volatile week. Not to say anything about the fundamentals, but the Feds are meeting this week, so it's going to be a lot of volume and volatility after they kind of speak and talk about whatever it is they're going to do. So expect probably a bit of a slow week to begin with, and then we're going to see some pretty wild moves, I think, by the middle of the week. And that's all that is to say, is that we could see all the volatility to kind of push us through any of these levels. So we could see some big moves going forward. Until we break back above or break back below either of these levels, it's kind of all just chop at this point. So let's go ahead and... Sorry, go ahead.
What day did they meet on? Is it Wednesday?
They meet on Tuesday and Wednesday. They don't release their reports until Wednesday, and that's also when the meeting is. So that's kind of what everyone waits for.
Mm-hmm. All right, then. Moving on.
So what do you think about the S&P? Any differences here?
Not really. It did very locally come right back up to the all-time high, and it's just kind of in this range. It is currently back up above the level it tried to hold here after the previous all-time high. So it's kind of holding this range. It does look like kind of a wedge here that's forming. I think this still has potential for upward movement. But same thing, if it started to fail down below these areas again, we'd expect it to come down here to about 48,000 or 4,800, excuse me.
Yeah, I mean, I see pretty much the same thing. One thing that does kind of jump out at me, especially on the 4-hour chart, is, obviously there's a lot of wicking above there, but that level right there, I think that until we can get some closes up here, even though, we're making every single one of these candles is essentially a higher low right there. That looks great. If we can't actually get closes above here, though, we are going to, like you said, have to move lower. And 4,800 is kind of the perfect level for that. You could see it bounce a little bit higher than that, but certainly in the low 4,800s. So in fact, I think we'll probably leave that there as the level to gain. But I don't see anything in the short term that says we can kind of call which way it's going to go. We need to either gain that level or lose it and make a new low. Cool. Let's go ahead and talk about RTY. We kind of have this prediction where if this is the level to gain here at 2,000, we've tested it before, made a new low, came back up, tested it again, got some closes, but then we've lost the level again, and even when retesting, couldn't close above. So we're expecting potentially, if we cannot regain this level here at 2,000, that we're going to have to make some lower lows here. We've got a fib pull where we think this is pretty likely to go, so mid-1800s. And that's just predicated on the fact that if we can't regain this level, then we have to make a new low lower than this low, which is already at 1900 essentially. So that's going to be the next level of support, which is kind of the midline of this consolidation here. And that lines up quite well with the technicals. What do you think about RTY?
I do think it's got a chance to live down here on this level here where we see this wicking. But it did kind of test it there, but it does look like it may have a chance to do this little like retest. But if it doesn't gain there and keep going back up, yes, absolutely, we're going right down.
Yeah, I mean, I see what you're saying because I like to see if it's going to test a level, it's tested at now as resistance. And so it's totally plausible that even though it's broken through that as resistance, it could come and use it as support. Until it's tested it as support and also broken through it, we can't confirm what I was saying before. But that is certainly the level to watch to see if that idea is going to continue and play out. So kind of the two levels there being 1940 and 2000. If we can break above 2000, we can move higher. If we broke below 1940, we're going lower. What are your thoughts on gold? Gold's kind of been in a little bit of a consolidation pattern recently, but there's some levels that jump out.
Yeah, we came back down to 2000 again. I can't tell. Is that basically that's the same low?
Yeah.
It's interesting. I think it can hold and come back up to 2055 now. But we could also, I mean, we've got it outlined on the chart. We could come back down, and we'd have to regain the range and try up again. But if we reject it, I think we'd come down here to these lows. We're right on that teeter-totter again. But I think there's a pretty good chance we'll come back up to 2055, and if we do, we'll be able to try for our all-time high again.
Yeah, I pretty much see the same thing. I do want to check on that 4-hour chart. It's also very possible, if we take the mid-range of this consolidation, this big candle that sent us up again to retest these highs, that could be a great area for, a wick down and then getting bought up. That's kind of the only look that I'd be comfortable with, considering if we broke this price level at 2007, I'd really want to see price break that level and get bought up. I don't want to see it spend a lot of time consolidating down here, because then it starts to look like it's gaining lower, right? It's losing levels at that point.
Right.
But if that can hold there, and then, I'm saying if it goes lower and holds there, we can retest for the highs, or like you were saying, we can retest for this level to potentially retest the highs again. What we don't want to see is losing this area, and that would look like confirmation back down to low 1900s. So, it hasn't lost anything yet, really. You could argue that it has lost this kind of weekly level up here that we've marked out, but that's just going to become the new level to gain. So that's kind of more what we're talking about. I don't really think there's too much more on gold to talk about other than we just need to hold 2007. We need to try to regain 2055. What do you think about the Dow? A little bit more straightforward, I think, on price action here.
I think the Dow is great for up. I want to take a really quick glance here at the monthly. You can see it's at all-time high there, as well as on the weekly. And then as you come in, you can really see how it looks pretty good. On the 4-hour, this level looks like the exact one that needs to hold here. We kind of want it to come down here, and then we could see it make new highs again. So that's the area I'd be interested in longing if that's the side of the market you were on here. What do you think?
Yeah, I'm pretty much agreeing with you, and plus I see no reason not to be on the long side of the market with the Dow. It's clearly making, like, that wick up there is still a new high, even though it's sold off. Right now it just looks like we're looking for a higher low to take the support and move back to the highs. So there's really not a lot to say about it other than it looks like good for higher.
If we came down below the red line, we could bounce off this one, but this could start looking like a short zone to take you down here. But relatively speaking, it's still basically all-time high. So
Mhm.
so still pretty bullish on.
If it's
on
gonna
the Dow.
lose, it's gonna lose a lot. So we're gonna have to see. We're gonna have to see this level right here at 37,500 get lost, and then that would be a pretty huge drop from there. So until that level's lost, we haven't really lost any major levels.
Right.
I would say we've seen that use as support for a while. So yeah,
Absolutely.
nothing bearish about the Dow. Oil a little bit more interesting recently. We've kind of been calling for, hey, let's see it come back to $80. We think it's coming back to $80 because of all these touches and support at 70 in the 70s here. We marked out this level to gain at 75, 70-ish there, and we did gain that. So now we're kind of in the point of retesting toward the highs here. We've touched up to 79 today, and I think that the level to gain here is 80-50-ish, which is kind of the level that failed to produce this whole leg down. So that kind of looks like it makes sense. Do you think that we could see it come back up here, or even not even get all the way up there, come back down to this level to gain, use that as support and breakthrough?
Absolutely. Oil likes to do that. It'll immediately, because we've rejected this area already. So I could see how they'd be getting shorts in right above these wicks to trap in longs and to clear out the shorts from before, so that they could bring it back down and then slam their shorts shut as they get the last of their longs in for a really good pop. That's exactly what I think could happen.
Yeah, and it just kind of makes sense with the way, like you said, that oil trades. So that's something to look out for. But regardless of being on the lookout for that, we have kind of regained a key level that needed to be regained to kind of restart the uptrend. So right now, still also looking for long side trades on oil. When it comes to the dollar, we've been kind of in this range for a little while, a week or two here. It's starting to kind of curl back up to the upside here. I would like to see it regain 103.9. You could call it 104 if you really wanted to, but we have that marked out there because that's the level that failed to produce this leg lower. So that is the area to gain now. And it's held up. We even seen it touch this 102.8 level perfectly on this wick. So that's a test, and that got bought up, and now we're moving back to the highs. So similarly to a lot of these charts, the dollar also looks like it wants to go up. It's really in no kind of danger to losing anything here, and certainly back in an uptrend on the daily chart. We've had a series now of higher highs and higher lows, so there's nothing lost about the uptrend now. That's supposed to be somewhat of a headwind for the stock market, but doesn't seem to be happening right now. What do you think about the dollar? Is there anything that stands out to you that's changed?
Well,
really
not particularly. Yeah, it kind of just went sideways. It did do that wick like you talked about, but that's fine. It was bought up, and so I think that we've tested the high of this range. So if it were to fail, the next spot we would see would be kind of like
lower for sure,
a box right in here, so that it would be able to have a chance to hold this rejection here that produced the low. So that's the next place I'd be looking for a long if it were to fail this range. And then, of course, lower down below.
Yeah, no, I think that makes a lot of sense. We'll just have to see if we either touch 103.9 or never get our chance and kind of move lower. I do agree with your kind of key takeaway that this is now tested, so if it went back, we'll probably end up seeing lower. That's important to consider. So we'll just have to see. And lastly, KRE. We've really regained a lot of the lost ground here. We kind of are testing what I would consider the key range to gain, the level to gain here. Now, maybe we're off by a little bit, but that is the area that failed to produce this leg that ended up moving down. So, we see all these wicks that top out of the same area, and that looks like resistance, and that's certainly what it is. But the key here is that this is our first higher high in since this whole leg down started. So we are starting to potentially regain. I could see this come back down here to 50, 50, maybe even 50 even, and then come and retest these, or we could just break through. But either way, this is holding up near the highs of this current move. I think that we're going to see 5650 sooner rather than later. What do you think?
Yeah, I see the same thing. It could definitely come back down to 50, regain at 50, 50, 50, 54 there, and then try again to 53. Or it could just go straight to 53 and then use it as support for higher again. But I think it's great for up. I think we're continuing up on this leg here.
Yeah, and I'll tell you, even if it came back down to those levels, this would be really, really good risk to reward for long. This is a good trade, even up at these levels. So
I agree.
We'll have to see. But that'll do it for this week. Thanks again for tuning into the Trader Hub Weekly Market Review. If you like this kind of content, sub to the Hub and consider joining our Trader Hub Discord community server. You can find it using our link in the description. See you next week.
Take care.